In a quiet research facility in California, deep within a cryogenic chamber chilled to tens of degrees below zero, an intricate lattice of superconducting metal circuits hummed faintly. And engraved upon one of those circuits was a single name, Rigetti Computing. Founded in 2013, Rigetti Computing is a superconducting quantum chip company at the heart of America's quantum technology race. The firm's mission is as audacious as it is complex: to harness the quantum mechanical principles of superposition and entanglement, the same paradoxical behaviors that defy classical physics, to build computers capable of solving problems that even the most powerful supercomputers would take millennia to complete. Its founder, Chad Rigetti, once declared, "We will open the door to computation faster than light." That statement was not just a technological ambition. It was a philosophical declaration, a challenge to the very limits of human calculation. And for a time, investors believed him. But over the years, Rigetti's name began to appear less in scientific journals and more in financial reports filled with contradictions. Its technology advanced steadily. Its engineers achieved breakthroughs that rivaled anything in the field. And yet, paradoxically, revenue remained stagnant while losses widened. Even more curiously, the stock price kept rising. Normally, a company's valuation moves in tandem with its financial performance. Growth in revenue tends to lift prices, and losses push them down. Rigetti's pattern defied that rule. It became a puzzle to investors, a paradox where science and finance seem to obey different laws of gravity. Was the company's value driven by its technology or by a myth? Then came the winter of 2024 when Rigetti unveiled a machine that shook the quantum world, the NCA-3, an 84-qubit quantum system boasting a 99.5% 2-qubit gate fidelity. For those unfamiliar, gate fidelity measures how accurately a quantum system can perform a calculation. In essence, it represents the system's honesty, the probability that its answers can be trusted. A fidelity rate of 99.5% meant that errors were nearly extinct, a milestone few had thought achievable so soon. In the world of quantum computing, this was the equivalent of landing on the moon. But when Rigetti released its financials immediately afterward, something strange happened. Despite the fanfare, revenue declined, and yet the company reported a profit. To the untrained eye, this might have looked like a financial miracle. But experts knew better. The profit did not come from business operations. It came from derivative fair value gains, a non-cash accounting adjustment. In plain terms, Rigetti had not earned more money. It had merely revalued its financial instruments on paper. The cash flow statement remained negative, but the income statement gleamed with artificial success. It was a classic accounting paradox. The books were smiling, but the bank account was not. Still, the market rejoiced. Analysts spoke of future value, and investors convinced themselves that Rigetti's losses were the price of inevitable greatness. The idea that Rigetti is selling the future spread like gospel through online forums and financial circles. But beneath the euphoria, a question persisted. When would the future finally start paying dividends? In early 2025, Rigetti announced a new partnership with Quanta Computer, one of Taiwan's largest electronics manufacturers. The collaboration aimed to mass-produce quantum chips, bridging Rigetti's design expertise with Quanta's manufacturing muscle. At first glance, it sounded like the missing piece of the commercialization puzzle. Yet the fine print raised eyebrows. The agreement included references to regulatory approval and financing arrangements. Ordinarily, a deal of this magnitude would specify production timelines, unit volumes, and delivery milestones. Rigetti's announcement contained none of these details. It was an anomaly, suggesting that the partnership was contingent rather than operational. To some investors, it looked less like a manufacturing plan and more like a strategic press release, a move designed to buy time and faith. Soon after, the company's quarterly earnings report deepened the mystery. Revenue had fallen by nearly 50%, yet net income was once again positive. This was another statistical impossibility. As analysts dug deeper, they found the same mechanism at work: non-cash valuation gains, not true operational profit. In other words, the company was growing richer on paper, not in reality. Then came another announcement. Rigetti claimed to have sold 2 units of its Novera quantum computer system, valued at about $5.7 million. But But there was one glaring omission: the buyers were unnamed. Normally, in the world of high-end research equipment, every sale is celebrated publicly. Vendors name the institutions, the installation sites, even the intended research applications. Transparency is standard practice because credibility drives confidence. Rigetti's silence broke that norm. Who bought these machines? When would they be delivered? Why keep it secret? The company offered no explanation, and that silence only fueled speculation. Some wondered whether the sale represented an actual transaction or merely a symbolic gesture meant to reassure anxious investors. Later that same year, Rigetti announced a new 3-year, $5.8 million contract with the U.S. Air Force Research Laboratory, AFRL. The project's title, Hybrid Superconducting Photonic Quantum Network Node Development, sounded impressive. But when analysts examined the details, another inconsistency emerged. This contract focused not on computation, Rigetti's supposed core strength, but on quantum communication research. Such projects, while prestigious, rarely generate meaningful revenue. Most are exploratory, funded through government research grants rather than commercial demand. This distinction mattered because it hinted that Rigetti's business model was still rooted in experimentation rather than execution. Nevertheless, the market once again responded with enthusiasm. Media headlines trumpeted, "Rigetti enters the defense industry," and the stock surged. Yet beneath the celebration, the fundamentals remained stark. Annual revenue hovered near $10 million, while annual losses exceeded $200 million. The numbers told a simple story. The gap between innovation and profitability was widening. Then, in the fall of 2025, Rigetti reappeared under the spotlight. At a technology conference in Washington, D.C., the company showcased a quantum AI integration demo built in collaboration with NVIDIA's NVQLink ecosystem. The imagery was breathtaking. Superconducting processors visualized alongside artificial intelligence networks. Investors saw it as the dawn of a new industrial paradigm. But once again, there were no follow-up announcements. No product roadmap, no commercial launch, no revenue forecast. Normally, such demonstrations are precursors to concrete deals or pilot programs. This one was not. The silence that followed was deafening. At this point, a pattern had emerged. Rigetti continued to achieve spectacular scientific milestones, yet offered little evidence of commercial traction. The company's announcements were stunning in scope, but shallow in financial substance. Each new headline fueled enthusiasm, while each new report quietly contradicted it. It was as if Rigetti were operating in two parallel realities, one defined by engineering excellence, the other by economic uncertainty. And so investors began asking the question that now hangs over the entire quantum industry. Is Rigetti truly bringing faster-than-light computation into reality, or merely generating numbers faster than it earns them? That answer, it seems, still lies frozen within the superconducting circuits of its quantum machines. The Valuester channel welcomes your insights and tips on listed, unlisted, or soon-to-be listed stocks and crypto assets. Share your thoughts in the comments. We might feature your suggestion in a future analysis. And to all of our passionate viewers who watch, subscribe, like, comment, and share our videos across platforms, thank you for your continued support. We will repay your trust with deeper, sharper, and more transparent content. This was Valuester.